Hey everybody, welcome in. Thank you all for being here. Let's just, as you can see, I am on the road. And a quick reminder for those that may be new to the channel, if you want to learn something new every single day, subscribe to the channel. No fluff, no frills, just KPM, which is knowledge per minute. Anyway, let's jump in. I'm going to hide my face here, talk about the story today. We're going to talk about some crypto updates, what's happening with stablecoins, Bitcoin, Bitcoin proxies, Fallout, DCG, Grayscale Bitcoin Trust. We'll also talk about Tesla versus Google versus Amazon and see where they all compare. And as usual, this is not financial advice. This is edutainment. So first, the big concern and the big lid on the market next week will be the CPI number. But let's talk about some of the other numbers. We're going to talk about the PCE, the PPI, and the PPE and why they're all relevant. And then we'll make an estimate as to what we believe the CPI will be next week. So first of all, the story of PCE. This little chart here, I added some arrows. It's from Trading Economics. You can see we now had the lowest PCE number so far this year in 2022. January, it started off at 6.1. Yesterday it was 6 and it came down from the high of 7. But PCE is personal consumption expenditure as the price index in the US. And it did increase by 6% year on year, i.e. October 2021 compared to October 2022, and is below the 6.3 as we saw in September. So it is improving. And it is, as I mentioned, the lowest reading so far this year. Prices for goods increased, I think, about 7.2%. Services, 5.4%. And if you rip out food, the PCE is 5%, which is also below the 5.2 we had last month, which is good. Let's jump ahead to the PPI. The PPI came in today ahead of expectations. It was 7.4 versus 7.2. And the core was 6.2 versus 5.9 was the estimate. It's still falling quickly on a year-on-year basis, but the upside surprises do not bode well for the upcoming CPI prints. We'll talk about them next. As you can see from this chart, you see a whole bunch of different color codes. You've got blue, final demand foods, red, final demand energy, orange, final demand goods less foods and energy, and then green is final demand services, and then the little purple piece at the top is construction. So let's jump ahead now to the PPI. This is a different view of what we just saw. This is the PPI percentage change from a year ago, and as you can see, it's falling fast, which is good. But remember, this is percentage change from a year ago. Now, let's talk about next week. Everybody's very excited. It has a lid on the market, as I always say. The Fed is controlling the markets too much, and everybody waits for the Fed to move. This is from Noam Will on Twitter, and this is a model he created that basically predicts inflation. It's been pretty accurate so far, so I thought I'd share it today. But here he expects we could get a 7.1 print next week. And if that happens, because the expectation is about 7.2, if we get 7.1, the markets will rally. So we'll see where this goes. But again, nobody really knows. Let's switch gears. Let's talk about Bitcoin for a second. It's unusual for me to start with some macro stuff, but this is the Bitcoin realized cap drawdown. And yes, per on-chain analytics, it signals yet another bottom. But price has been kind of flat, low volume, low activity. But realized price is a much more stable view of Bitcoin's growth and capital inflows. And the realized market capitalization is now down 17.3%, which is significantly higher than 2015 and 2018 cycles of 14.13 and 16.51. Remember, higher means worse, going down deeper. And also remember, for Bitcoin, the macro headwinds remain because there is correlation with risk markets. Switch gears for a second. Let's talk about GBTC discount. It is at a record 47.9%. And I don't know why the GBTC, the Grayscale guys, just don't come out and say, hey, we have the Bitcoin, everybody, we have it. Instead, everybody's rattled. Nobody trusts anybody in this market, which is fair enough. But just to put things in perspective, ran a little calculation this morning, one Bitcoin in GBTC would only cost $8,383. Basically, the GBTC price hit $8. Bitcoin price is $17,135, and you have 0.000911402 Bitcoin per GBTC share. and that discount is super high. By my calculations, right now sitting live at 48.92%. And to own one Bitcoin, you would have to, with GBTC, you'd spend 8,753, and the savings, sorry, that's not the price. It still costs you over half, but the savings would be $8,383, but you can still buy that Bitcoin for $8,753. Sorry for that slight error. I am not drinking coffee today, and that could be the problem. So next, why would closing the GBC discount help the world? Well, it would solve a lot of problems. This is why I don't understand why Grayscale is not doing it. Because DCG is in hot water. DCG is a levered bet on the price of Bitcoin and by extension GBTC. And we'd if we could close that discount, it would help restore the DCG balance sheet, and it would give a lot of calm to the market as well. So let's talk about another piece of news from Coinbase. This was kind of peculiar, and a big thank you to Sanjay for sharing with me. Coinbase is urging the switch to USDC, and the TLDR, as you can see from this document, switch to the trusted and reputable digital dollar, not Tether, but go over to USDC. Obviously, there's a lot of money to be had now with stable coins, especially with the yield that they are earning, nearly 4%. But now, Coinbase will let you convert your USDT to USDC with zero fees. So it's weird. I'm always very cautious when things are pushed hard and sold hard. So red flags go up there. But what we did notice as well, when we looked at the on-chain analytics, stablecoin deposits have skyrocketed, and this is the USDT number of exchange deposits hourly. So maybe, I don't know, one or two things is happening here. One, people are depositing their stablecoins onto exchanges to trade them in for crypto like Bitcoin, or people are depositing USDT Tether onto exchanges to swap them for USDC, which they believe is safer. I don't know. We shall see. Let's look at the stock market today. You can see there's a lot of green out there. Tesla, bright green. Google, down. Amazon, down. I'm going to talk about these names as well as we go forward, because this is fascinating. That slide is out of place. Let me come back to that in a second. That one too. But I want to talk about Amazon earnings. This is from Gary Black, and he looked at the Amazon earnings estimates a year ago. Okay, 1 year ago compared to today, Amazon's earning estimates are down over 70%. And it shows that Amazon has had a terrible year, and they're hit by things like increasing prices, which in our macro model, it shows that it is a massive indicator of where the price of retail stocks and technology stocks like Amazon would go. But let's look at Tesla as a comparison. Tesla estimates from a year ago to today are up 43%. Why is Tesla getting smashed when they keep outperforming expectations from earnings? Very strange. Let's look at some numbers for Amazon versus Tesla. I also threw in Google and NVDA as well, just for giggles. You can see here it has all the usual stuff I look at. The price right now, earnings per share estimate next year, the 1 year target estimate next year. You can see Tesla has a 263 target. It's currently trading at 180. The trailing P, forget that. The forward P is what matters. And if you look at the forward P, the winner on the board is Google with a 17.76 forward PE. But number two is Tesla with a 32 PE. And a lot of people question that. I think it'll be a lot less than 32 if the price remains stable. Remember, these are moving targets. As the price goes up, as earnings go up, everything changes, and vice versa. But the key here I want you to focus on is that PEG ratio that I talk about all the time, the price earnings growth multiplier. And here, anytime you see a stock with a PEG under 1, we had a month or so ago, Facebook Meta was trading at a PEG of 0.7, which is unheard of. Never in the history of me looking at Meta was it ever so low, and that caused me to buy. We look at PEG of Tesla here as 0.88. It is ridiculous. Look at Google in comparison, 2.22. And of course, Amazon, it's negative because it's just a crummy year for them. But let's just switch gears and look at the chart of Amazon versus Tesla. Despite those numbers that I shared with you, Amazon estimates have fallen by minus 70%. and Tesla has gone up by plus 40%, but the charts are identical. You cannot make this ridiculousness up. Over the last 365 days, Amazon is down 48%, Tesla is down 46.5%. Makes no sense. They're kind of tracking each other despite the fundamental performance is completely different. So with that, everybody, hope you enjoyed the show. Quick one here from the road. I will see you all later. Thank you to the mods in the chats and everybody out there, and take care. Bye.